In this video, I'm going to show you exactly how I'm going to benefit from this chart. Stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, how you feeling out there? I'll tell you what, this stock market is absolutely crushing souls. This stock market right now is not for the weak, and most people are not looking. But this stock market presents many opportunities. If you're like me and you need to generate income, you need to still put money on the table even though the market is crashing. So how can we do that? This video, I'm going to show you my ideas for a stock that is absolutely bellied, and we're going to look to use a poor man's covered call trade. I'm going to show you how I set that trade up so we make sure we put ourselves in the most favorable position to have success. Even in this stock market, we can have success. Always remember, there's winners and losers. More losers now, but I'll tell you what, just like any stock market pullback, correction, crash, Wall Street comes back looking for value plays, and you know all of our great stocks have been trimmed at a point where there are tons of value plays. So let's go ahead and get to this because I really do want to show you that chart and how I'm going to benefit from it. If this is the first time you've ever been to my channel and you like what you're hearing, go ahead and subscribe to the channel. It's right there and it's free. And hey, look, if you like the video today, bang that like button. It lets me know you like what I'm doing. Well, what is John doing? Well, we have 16 trades on the books right now. And I'll tell you what, about 4 of them are going to expire at the end of this month. That's going to put cash flow on the table of about $4,000. That doesn't mean I'm not losing my ass just like everybody else. But what we're doing is we're using the stocks that we have and we're knuckling up. We're doing what we have to do, whether we're writing covered calls or we're selling cash secured puts. Look, the bills don't stop. I've told you this. I can't stop either. So while others have turned their head and they won't look, not me. We have to keep staying the course because my bills don't stop. Okay, that's the common theme here. We are generating monthly income, selling premium, writing covered calls on the shares that we own. We're using cash to sell cash secure puts. And we do this where we manage our trades. So we do it consistently. And when we have that experience, we can do it. And I'm doing it right now. Hey, look, I've been here on this channel for 6 years, and I think if we loosely count, we've had 2 crashes and at least 5 corrections where people were literally freaking out. Through all of that, I've been able to put real cash on the table, generating the cash flow needed to live in retirement, pay some bills, or live the good life. This is not hocus pocus here. This is not a YouTuber that found some success during the pandemic talking about stocks that just shot up from the V-shaped recovery. This is a cat that is on the streets just like you, gotta generate income, and I'm doing it, putting my money where my mouth is. So if you see some of your favorite financial YouTubers a little rocky, a little shaky, my guess is they derive a majority of their income from those YouTube videos. Here, that isn't the case. I think my YouTube income fell below $100 bills last month. But you know what? I have less than 10,000 subscribers. Yet every video gets over 1,000 views in a week's time. That tells me you're out there wanting to learn, wanting to hear what a real active trader, an active trader that puts money on the table, has to put money on the table, is doing in this stock market. I'll tell you what, I appreciate everyone that comes back and watches my videos. I hope you learn something. See, at the end of the day, it's really all about me sharing my talent and answering your questions, right? So many people email me just asking me basic questions. And right now the questions are, should I sell? I'll tell you what, at the end of the day, this YouTube channel has helped so many people. It's also helped me stay motivated and always trying to up my game. So maybe you take a little bit from my videos and better your situation. So let's talk about my situation. Right now, I'm still selling covered calls on my poor man's covered call trades. Look, my leaps are down just like everyone else's. But we're still going to use that 30 delta 30-day trade. And in this case, that's exactly what I did with Morgan Stanley. Now, I don't have that many shares. In fact, I only have one contract or controlling interest of 100 shares. But we keep using that to generate the income. Because remember, with this Leaps call option, I only invested $4,400 when the stock was trading near $88. That would have been $8,800 of capital I would have needed. So I'm literally getting in half price. Yet, using the poor man's covered call, we're generating real 30-day covered call incomes as if I owned 100 shares. Now, in this case, I have written about 3 covered calls on Morgan Stanley, and we've pocketed some money. We're down on the Leaps, absolutely down on the Leaps. Please, I'm not trying to sugarcoat nothing, but it's a mindset that I always tell you. We're holding this trade until we're profitable. And if it's never going to be profitable, hey, look, John keeps spinning the 30-day trade. I got to put money on the table. We will deal with a Leaps call option that is under my purchase price when that time comes. And in this case, it's January 2023. And then I might take ownership of the shares, just like every other Morgan Stanley shareholder. But for over 1 year, I've been able to generate income spinning covered calls month over month with only half the investment. Now today I'm going to show you a stock for which I could use a Leaps call option on a stock that's seriously depressed, and I can buy 3 Leaps selling 3 near-term covered calls for essentially the price of owning 100 shares. Okay, we're going to talk about that here in a moment. And in fact, let me show you what I sent to the members about this stock market. I wanted to give you a quick sneak peek of where I'm at with my current trades. I send the members this every single week, or at least I try to. I let them know what covered calls and puts are expiring this week. I also give them a game plan. Now, I also show them all the other covered calls and cash secure puts, for which I have a total of 16. And I show the stocks that I have sitting on the bench right now. Have to give them a little bit of time, and we'll get them in the game. I also send them a monthly recap of all the capital I used, how much money I made, and to be honest with you, we could actually lay all the numbers out there to see if I'm effectively using my selling premium portfolio, generating the kind of income that is needed in retirement. Now, many times they ask me, hey, where is your selling premium portfolio value now? Right? Everybody's losing money. Where is yours? Well, this week I'm going to send a trade desk out that actually shows where all of my trades are and where my selling premium portfolio is value-wise. See, I could show you that I'm down on trades and where I'm at, but I'm going to show you how much capital I have made or lost. And that is one of the most important things, because I have to use that selling premium portfolio to generate income. Well, if you remember, you're going to get that email. Now, I have a 1 free month for you, okay, at my website, cptdashboard.com. You're going to get a 1 free month offer. 1 free month. This is what they get. This market is falling, and I thought the S&P had a nice bottom at 4,000. And I'll tell you what, it tested that, and it moved higher. Last Friday, it was a double bounce on that 4,000 number. Wall Street loved it. Then, good old Walmart and Target absolutely kicked us in the ribs, and now we're looking at the S&P possibly getting to 3,600. Okay, 3,600 on the S&P. So you better be prepared for another 1,000-point down day on the Dow. It could easily happen. See, those algorithms kick in and they sell regardless. So you have to be prepared. Hey, either turn away and don't look for the next week, 2 weeks, or understand it's going to happen. And always have your notepad out. Always be writing down some notes, maybe looking for those value plays that you've been wanting to get involved in. Well, now could be a great chance. Well, Walmart is one that many people are hitting me up about. So I'm thinking not putting in $12,000 buying 100 shares of Walmart. I believe Walmart's near a bottom here because the markets might be near a bottom. Now, how are we going to play this? If I wanted to buy 100 shares and write a covered call, I'd have to pony up some $12,300. That's a lot of capital right now. But what if we introduce the poor man's covered call? So here I sent to the members this morning, poor man's covered call trade. if we bought the Leaps call option, the 75 strike, which is a 95 delta leap, let me show you the poor man's covered call initial trade setup window so you really get a feel for this trade. So Walmart right now is trading for 120.66. Okay, the email was put out earlier this morning. If I buy that 75 strike to January 2023, I'm going to pay approximately $46.88 for that. And because it's a 95 delta leap, remember, the leap will move 95% of a $1 move in Walmart stock. Absolutely love that. Plus, the time value of this leap. Remember, time value equals cost of the trade. It only represents 1%. You buy this Leaps and you're going to use it for near-term covered calls. Your cost is 1%, right? Regardless of where the stock goes, your cost is $1.22. So can you make that back? Well, of course you can if you buy the Leaps for $46.88 and you immediately sell the 30-day June 17th 125 strike. Now that's out of the money. You're going to get approximately $2.70 back. Now, that's a 30-day trade. If it goes to expiration and you have your shares taken away, well, you don't have shares. You would close out the trade early by buying back your near-term covered call, losing money. Your Leaps call option value will have moved 95% of the share price moving. So you will collect approximately $683 on $4,600 invested. See, that value is of 100 shares, and you only used a third of what we would have used to buy 100. Let's do the math. Had we used the full allotment to buy 100 shares on Walmart, what that would equal if we bought 3 Leaps. Now, as you can see, it's about $2,000 more, but it's approximate. We have to do this in share counts of 100. If we bought 3 Leaps call options, that would be about $14,000. Notice we would write that same covered call and collect $2,051 if our shares are taken away. Now, if our shares are not taken away and the stock falls, that's okay too. We've generated $810 or 5.7% on money invested. See, the poor man's covered call, if used correctly, allows you to use less capital up front, but allows you to generate the same 30-day 100-share covered call premium or cash flow using that strategy. Now, I know a lot of times this gets overwhelming and the strategy just seems too big of a mountain to conquer. But I'm going to tell you this. It's really simple if you can grab onto the concept. Instead of buying 100 shares, we are buying a Leaps call option to take control of someone's shares at a price. Now, in this case, that's $75. We can buy somebody's shares at $75. Now the question is the difference between $75 and where the stock's trading, that's going to be your intrinsic value of the option cost. And remember, there's always time value. Options have intrinsic value and time value as a part of their pricing. So what you need to understand is the time value is the profit for the call seller. Well, that's our cost. Remember, intrinsic value is intrinsic value. There's no gain or loss for either the call buyer or the call seller. It's that time value. Now, my calculator, cptdashboard.com, click free spreadsheets, download the poor man's covered call tracker. Inside is this initial trade setup. I don't spam you. I don't hit you with ads. It's free. Just take it, just use it. Just make sure if you do the poor man's covered call, you make sure you pick that Leaps call option that is such that it's deep in the money and you're not paying that much time value. And in fact, these days, I do not want my time value to represent much more than 1%. Now, on those high-flying stocks, I'll go as high as 3% because my first covered call might be 5% cash on cash. Now, I don't like doing that. I want to stick to great sideways to higher stocks. If you look at my poor man's covered call portfolio, it's Morgan Stanley, it's 3M, it's Gilead. Hell, it would be Walmart. Okay, now we're in a market crash situation, so throw that idea out the window. We have to spin the plates right now. But for the most part, these stocks trade sideways to higher, and that's what you want. So right now, go out and find that great stock, right? That great S&P type company that has profits, dividends, and look for a possible poor man's covered call trade where you only have to use half or maybe a third of the capital up front to generate these kind of returns. Now I'm going to leave it right there. Keep your head up. I've been there. I hope the stock market isn't giving you anxiety. We're half cup full. This too will pass if you're asking me. Hey, look, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.